Hello and welcome back to yet another exciting week on the stock market. In this week's episode, I will walk you through the news. I have just selected a handful of news since there is so much to cover this week. Then I will give an update to my portfolio. Since we have now passed a month, I will also do a summation of what I have actually done in the entire month of July. And finally, I will answer some questions which I have received from the audience. So let's start by addressing one of the most important news that we have seen within the week. So the United States reported a GDP growth rate of minus 32.9%. And I mean, when you take a look at the last 3 years, this is a severe drop. And in fact, if we go to the maximum and see all the way back to before 1960, I mean, this just looks like small, tiny movements compared to this drop. But despite the drop being of 32.9%, it is actually a little better than the forecast of 34.1%. Hence it came as no surprise when the Federal Reserve had their meeting on Wednesday that they are still keeping the interest rate between 0 and 0.25%, and at the same time once again announced that they are willing to use all the tools in the toolbox in order to get the US economy back on track. And at the same time, they announced that they are still delighted to see all the financial policies which are being enforced by the Senate, since that is a prerequisite as well in order to get the economy back on track. The Federal Reserve cannot do it alone. And if we then look to Germany just to see how it is in Europe, they also announced the GDP growth rate for the second quarter. And again here we can see a negative growth rate of more than 10%. And again here, when you look at 3 years history, this is really severe. And in fact, if we go to the maximum, just like in the States, we have never seen such a low result in the entire history when you have made these data sets. So this is truly astonishing what we're seeing currently. And again, this was around the expectations, so it should come as no surprise when we see these bad results. One important thing to note here is GDP numbers are always backward looking. I mean, you can see that they covered the month from April to June. So this is what has happened. What is interesting for you as an investor is what is going to happen, because past performance is no guarantee for future performance. So let's take a closer look at some of the numbers which are currently available to us, which could potentially tell us something about the future. So let's take a closer look at some of the indicators which we can potentially use. I mean, I read an article in a Danish newspaper this week which says that the IFO number is 19.5. And then I was actually a little annoyed, because unless you are a professional working with this or have heard about this before, it doesn't tell you anything when you see that the IFO number is 19.5. So let me try and explain in a bit more detail what this number actually means. So if we make a quick Google search for IFO Business Climate Index and go to the wiki page, we see that the IFO Business Climate Index is a closely followed leading indicator for economic activity in Germany, prepared by the IFO Institute for Economic Research, which is located in Munich. So what they do is they make a report where they are asking more than 7,000 survey participants about manufacturing, construction, wholesale, retailing, and about how they feel, if it is good, satisfactory, or poor, and how it is compared to the last 6 months. For instance, is it more favorable, is it unchanged, or is it less favorable? And the number 90 is simply referring to, as we can see here, that the 1st of January 2005 have said this is our index, this is 100. So every time that you have a number, it is in relation to the index number of 100 back in 2005. So with that information in mind, if we then go and take a closer look at the report, so we can actually put a meaning to these numbers, 19.5, if we go and take a closer look here, we can see that the numbers were at the lowest point back in April, and we can see that they have been increasing ever since. So the market conditions are more favorable than they were last month. What we need to compare is 1 month at a time, and as long as this is increasing, then it is more favorable to be in business than it was last month. But we can of course also see here that we are still not back at January and February levels before we were hit by the crisis. And we need to remember that this is no guarantee for how it will go in case we have to shut down everything again. But if we believe that the worst is behind us, then we can truly see here that the conditions under which the businesses have to operate has been improving since April. So that gives at least some sort of comfort when you have to determine where you want to put your money. And I will of course include links in the description below for the economic indicators regarding the GDP from Trading Economics and this report from the IFO Institute, and of course also just to the simple Google search regarding what IFO numbers actually are, just so you have it and can read it for yourself. So while we are on the topic of whether or not the worst is behind us, Berkshire Hathaway continues to buy more of Bank of America. This time they have bought for $522 million more in Bank of America, so they now own 11.8%. I will of course include a link in the description below to an article from Barrons where we can see that Berkshire Hathaway has now legally been allowed to own up to 24.9% of Bank of America. Usually there is this rule saying that no company can own more than 10% unless they want to follow the same rules as the bank themselves, and typically these hedge funds or investment companies as Berkshire Hathaway do not want to do that. But in this case they have actually had an exemption for the rule regarding the 10% of ownership, so now they are allowed to own 24.9%. So it will be really interesting to see if they continue to buy more of Bank of America at the current price, because we can see here they have been buying at a price between $24.3 and $25.2 per share. So currently Warren Buffett must feel that Bank of America is really severely undervalued, since that is when he buys. This is a value investing for the long term. So that was a lot of financial news. Let's take a closer look at my portfolio and see what has happened within the week. So the first thing you notice is that there's a red circle around this episode, meaning that my portfolio has declined in value compared to last week. But if you just look to the value, you can see that I am only down $100 compared to last week. But since I have been investing $1,500 within the week, I am actually down $1,600 in total in capital gains. And it should come as no surprise that tailored brands is one of my really big downsides, since they are potentially going to file for bankruptcy. So you can see that I am down more than 90% on that one. I'm still planning to hold on because now I would say it doesn't really matter for me, the $210. I will hold on to that, and you can say speculate in that sense, because I don't think it makes any sense for me to sell with such a big loss. Then I would rather keep them and potentially have a tax benefit later if I need it, so I can actually control when I will have it, or in the really good case they actually survive and will come back up to value many years from now. So what have actually happened with my portfolio within this week? Well, if we start with the dividends, we can see that the total dividends for this month is now $56.25, and this is due to the fact that I received almost $35 from Simon Property Group. And as I mentioned previously, I knew that July was going to be much lower than what I have seen the last 4 months, since my previously biggest holding, Macy's, have decided to slash the dividend completely, and I was expected to receive around $180 from them as I did previously. So if you add $180 here, you could see that my portfolio would actually still be increasing. But since that has been slashed, now I know that that number was much lower, which was to be expected. If we go and take a closer look of what I have actually been adding within this week, then we will see the same as last week, that I have actually just been adding more into JP Morgan, and this week I have actually added $1,500 more, so the invested capital in JP Morgan is now $2,500. So just to make a summation for July, this is all the stocks which I have been buying. So Simon Property Group, $250, LTC Properties, $500, and JP Morgan, $2,500. So a total worth of $3,250, which is way above my target of around $1,000 every month. But this was due to the fact that my summer holidays was much more cheap than it usually is, since I didn't go and travel anywhere. And what did I actually get from this? Well, over here you can see the yearly dividend. This is, as you know from my Google sheet, just the number of shares times the last announced dividend times the payout frequency. So every year from now on, I will receive $142.40 if they do not slash the dividend. And hopefully this number will increase, since I hope that these companies will increase their dividend eventually. I know that JP Morgan currently won't increase it this year, and perhaps not even next year due to the regulation. But currently I think that that was a very attractive buy, and that's why I have put in so much money there. So I'm really happy to see that I have now increased my yearly dividend income with $142. I know this is much more than what I would usually add in a single month, due to the fact that I have invested 3 times as much. So I'm really happy to see how this will play out in the long run, and just keep adding on to this snowball. If we then move on to some of the news items within the portfolio, ExxonMobil has declared a dividend which is in line with previous. Currently that is actually quite a high dividend, and I have seen some articles about whether or not this is actually a good idea for ExxonMobil, and currently I'm sort of more in line with the people who are saying that perhaps they should actually cut it a bit, since it is really costly for them to keep up the dividend when the oil prices is currently so low. Now let's turn to some questions from the audience. Hey Lazy Money Game, why don't you have any gold stocks in your portfolio? Well, if I look at what gold is, then I could perhaps have the same interpretation as Warren Buffett and say, I really do not understand the concept of gold. Since you have this piece of material which you dig up from a hole in the ground, and then what do you do with this material? You put it back in a bank box, meaning another hole in the ground, just at a different place. So what value does that actually create? So with this interpretation in mind, then I would have a hard time justifying why I would be buying gold stocks. But if you, for instance, turn this question around and say, maybe the viewer here has thought about, well, every time that we see a crisis, we see that there will be a spike in the gold price, and this crisis is exactly the same. We have seen a spike in the gold price, so perhaps it would be a good place to invest. But if you are a fundamental investor and you say, I simply do not understand the underlying product, well, then you shouldn't invest in it, because that's sort of the general rule. If you do not understand the product, then you shouldn't invest in it. And it's not because I have anything particularly against gold, but I mean, in some sense you can say, well, the gold price is already quite high now. Do I actually expect it to go higher? Or if you, for instance, rephrase the question and say, is it basically just raw materials that you want to invest in? Then I would perhaps say that could be something which would be interesting to look at. Meaning, if you buy some raw materials which is actually being used instead of just being digged up from a hole in the ground and put into another hole in the ground, that would personally for me be much more interesting to investigate. And of course, I mean, if you in the future we'll see another crisis and we expect the same thing to happen with gold again, well, then it can obviously be a good investment to buy it. Just because I don't understand it doesn't mean that it won't be a good investment. The next question I have received goes like this. Hey LMG, why don't you have any tech stocks like Apple or Microsoft? Well, that is actually a really good question, and honestly I have been looking into both Apple and Microsoft to see if I would add them into my portfolio, and you can see when you go back historically and look through this current situation we're in, that it would have been a super good deal to have Apple or Microsoft in your portfolio, since tech has actually gone up quite substantially. So whether or not that can actually justify the current valuation that the companies have, I personally don't like buying companies where you have a PE ratio of 30 or more, because that implies that the company has to grow extremely fast in order to justify such a rich valuation. I'm not saying that you won't see growth in Apple or Microsoft, of course you will, but currently I'm not really sure that I'm there yet. And of course you can say that I should be sad that I haven't bought Apple before Friday last week, since the stock increased more than 10% in value, but you have to look at it from the fundamentals perspective and say, do I really want to buy into this? And I know that Apple has so much money inside the company, so there's no risk on that dividend, and you could easily justify holding the company just for that reason. But I do not want to buy a company if I think it is quite high valued. I like to buy companies on a discount. So whether or not Apple or Microsoft is currently on a discount, I'm not so sure of, and that's why I currently do not own any of them. But it is definitely interesting companies to look at, so thank you very much for that question. So that concludes yet another exciting week on the stock market. So until I see you next Sunday, remember to comment, like and subscribe. Bye!